Tamakaze here with a video on Big Five sports goods. Want to talk about this because this could be potential for one of the major short squeezes that we're going to be coming up here in the next month. So, some interesting things happened today. Uh, Big Five sporting goods had their earnings today, and while they were slightly below estimates, what was really interesting was that they declared a special dividend of $1 to be paid out November 17th. And they also kept their dividend of 25 cents. So this is significant because Big Five is very heavily shorted, if not the most shorted stock on the stock market right now. Why is it shorted? I haven't quite been able to figure it out, but basically they think that there's no future for Big Five and that they think that it's going to go down. But for me, I think the shorts are stupid, and I think they're shorting a stock that's a losing scenario, kind of like when you were shorting Tesla. So some key statistics on Big Five is they have no debt. They have a war chest of over 100 million that continues to grow. The reason they declared a special dividend is because they have too much money, and so they want to give it back to investors, which is a strong sign of a healthy company. So I believe shorts are going to start to cover. There's also a second reason why they're going to start to cover, but before I get into that, I'm going to go over the short statistics so you can understand why the short squeeze could be so powerful and what we could potentially see from that. So, current shares shorted are just shy of 9 million shares. This is significant because there's only 20.33 million shares available to trade. So this is about 44% of the available float. So the float is the available shares to trade. So basically, if you wanted to go buy or sell a share, that's how many are available to do so. Now, some lesser known statistics is almost all shares available to short already shorted. So most people that own the stock aren't allowing people to short their shares. So 87.89% of all shares available to short are already shorted. So that means that shorts can't attack it much more. Now, obviously, there's a little bit of wiggle room there for it to short, but with what's happening today with earnings, I expect that major institutions are going to see this as a strong sign of a healthy company and want to get into this. And especially because the number of institutions investing in Big Five has only increased. And I put on here a major statistic because this is something that a lot of short squeeze researchers don't look into is the average days on loan. So when you're looking at this, you need to understand, where did they short? So what is their average cost that they shorted? So once it gets over that, they're now in a losing position and they're going to want to cover, right? So the cost to borrow is the percentage that they're charged for holding that short. So it's basically like a bank loan. You get charged a percentage that you pay back over time. It's the same thing with a short share. So 44.37 days from today to back, it's about September 20th, September 21st, and you can see there was a red candle this day that they could have shorted. But that doesn't mean that they shorted that day specifically. It's just the average day. So that means they probably shorted before it and they've shorted after as well. So you can see there's a couple of big red candles I've highlighted here with some arrows and some white paint here. And I believe the majority of shares shorted were taken on this run up right here in this flag, and specifically this candle right here. So they shorted it down from 35.50 all the way down to 29. So we could probably say their average is around 33 here, which is probably about half of the loans out there right now are probably in the 33 range. Now, the other half probably came after, and you can tell this by the fact that the number of loans out there that people are shorting has increased significantly in the last 30 days. So that means they've been shorting all of these pops here, and that's what all these red candles are people continuing to short and continuing to come in this to try to get it down, to pop it down, but they have not been able to do so. And so that's why you see the average is actually over here and not over here, because these are all the new loans that come in. So you're seeing half of the loans out there are below the current price, while half are in above it. So we're kind of at that zone right now where the bulls and bears are fighting, right? And they were hoping that earnings today would shed some light on that and probably help one side or the other decide. So tomorrow the bears are going to have to make a decision, aka the shorts, whether they want to continue to hold or whether they're going to want to cover. Now here's why they're going to want to cover and why the dividend that they declared today is so significant. So when someone is short a share and a dividend is paid out, the person that is short that share has to pay that dividend. So they are responsible for the dividend because they're actually borrowing it from the company as well. So they are responsible for paying out that dividend. So now you have $9 million that these shares are about to lose that they're going to cover. So they're either going to want to cover before the dividend or they're thinking it's going to continue to drop and they're just going to eat that because they think it's going to drop more than $1 to cover that $1 that they're going to have to pay. So let me show you what happened last time they declared a special dividend. So I'm going to pull up here the dividend history, put that over the screen here. This is from NASDAQ.com, so you can go get this yourself. And so I have here the BGFV dividend history, and you can see the last time they did a dollar dividend was effective date 5/14, which I have highlighted in pink here, and that was declared on 4/29. So 4/29 was right here, so they declared it right here. Earnings happened. They had good earnings, so there's no reason for it to go down. And you can see then the shorts decided, hey, we probably should cover before this goes out, and that caused a short squeeze from $17 all the way up to $28. And so they covered there. And so then they thought it would drop after that, but it did not. And so they had the second dividend, which then caused a second short squeeze, and that's what happened there. So the first short squeeze caused a second short squeeze, which could potentially happen again. So I'm expecting this to potentially happen again in the next coming days. So this is something I wanted to highlight for you guys to take a look at because I do think that there is a potential availability here for this to be squeezed once again. Now, from a technical aspect, let's clean this chart up, and I want to show you a little bit of the technical aspect, which is also interesting. So the shorts did attempt to squeeze this after hours today. I want to go into that a little bit because they missed technically on revenue and EPS slightly, but was still one of their best quarters of all time. And you can see price action has held. So these last two quarters they had were actually in line with what they had today, and their guidance was good. So if we turn on after hours, we can see what happened after hours today. You can see the algos took a hold of that. They saw that it was a miss. They drove it down right into support. And you can see this support goes all the way back. And so this is a multi-year long support line. It retested it, bounced all the way back up and held above this pivot zone. So it is actually holding above this support and it closed right on support. So tomorrow, if this holds above 26.60, above $26 basically, and gets above $28 again, for me, the short squeeze is on, and this is something you're definitely going to want to look at and potentially consider yourself. So this isn't investment advice. This is just something where I like the stock and I like the possibility. For me, the risk reward is there. And so keep it on your radar over 28, decide what you want to do. But I really like the stock. The data's there. Hopefully you guys enjoyed this video. Give me a thumbs up. If you don't, you're going to kill a unicorn. Go ahead and subscribe as well while you're at it. And I hope you have a wonderful day.